Rise and fall of 10 American corporations collapsed by fraud and greed. America, a land of dreams and endless opportunities, where corporations rise to the zenith of global power. But beneath the glitz and glamour, there lies an underbelly tarnished by tales of fraud and insatiable greed. Welcome to our exploration into the rise and fall of 10 infamous American corporations. Over the decades, numerous American corporations have graced the global stage, yet some of them collapsed under the weight of their own misconduct. This documentary delves into these dramatic stories. Starting with Enron, the energy giant that was once hailed as America's most innovative company by Fortune. Yet behind this praise lurked a colossal financial scandal, where manipulation and financial irregularities amounted to billions of dollars.
You have the crime of the century here that seems to have tentacles reaching off in every direction.
Enron Corporation, once the darling of Wall Street and the 7th largest company in the United States, collapsed spectacularly in 2001. Due to an enormous accounting fraud scandal. Founded in 1985 and based in Houston, Texas, Enron was initially a natural gas supplier but later diversified into an energy trading company. Its stock prices soared in the late 1990s, reaching an all-time high of $90.75 in mid-2000. The turning point came when it was revealed that Enron's profits and revenues were grossly inflated, a consequence of complex and often illegal accounting practices designed to hide debt and losses. These practices, coupled with aggressive corporate culture that prioritized profits over ethics, led to an overstatement of profits by almost $600 million.
Enron became this giant news story that seemed to surprise most of the media as much as the general public. None of us were following it. And then suddenly there it was at the heart of this enormous scandal.
In 2001, doubts about Enron's financial health grew, and the Securities and Exchange Commission began an investigation. By December 2001, Enron filed for bankruptcy, wiping out nearly $11 billion in shareholder equity. This financial disaster resulted in thousands of employees losing their jobs and retirement savings. Enron's collapse marked one of the most infamous chapters in American history.
You want us to believe that you sat there in your office and had no clue that this place was about to collapse.
On the day I left, on August 14th, 2001, I believed the company was in strong financial condition. I did not do anything wrong that was not in the interest, and all the time that I worked for Enron Corporation, that was in the interest of the shareholders of the company.
This company collapsed because of greed, corporate greed.
I'd like to see all of their money taken away from them. I'd like to see them live like common folks.
The last time I looked, it was a natural gas company that was the dullest company in the world, and I never paid attention to it. And then suddenly it was brokering my electricity. And then suddenly it was brokering a lot of other stuff.
We hear from the voices that live through this disaster and experts who decode the complex web of deceit. Then we turn to WorldCom, a telecom titan that fell into one of the largest bankruptcies in American history. We unravel how its leader, Bernie Ebbers, committed an accounting fraud of over $11 billion.
Is WorldCom a financially sound, solid, surviving company?
Absolutely. We are free cash flow positive. We announced that today.
WorldCom, once the second largest long-distance telephone company in the U.S., collapsed in 2002, culminating in the largest bankruptcy in U.S. history at the time. WorldCom's fall was a result of an accounting scandal that saw the company inflate its profits by approximately $11 billion. Founded in 1983, WorldCom grew rapidly through a series of acquisitions in the 1990s, most notably MCI Communications in 1998. Under CEO Bernie Ebbers, WorldCom's stock price soared, reaching a high of $64.50 in 1999. However, behind this success was a web of deception. WorldCom had begun to categorize regular expenses as capital investments, artificially inflating its profits. When the company's internal audit department discovered $3.8 billion in fraudulent entries in 2002, the enormity of the deception began to unravel. The fallout was immediate and severe. WorldCom stock plummeted, the company filed for bankruptcy, and Bernie Ebbers was convicted of fraud and conspiracy, receiving a 25-year prison sentence. The WorldCom scandal shook the corporate world, leading to significant regulatory changes, and served as a stark reminder of the potential human cost of corporate greed and dishonesty.
What do you want to say to the shareholder out there that's holding WorldCom that just got the news that the SEC has conducted an informal inquiry?
It's a very difficult thing to know what to say because I don't have enough definition to what they're asking. It was not anticipated. It's a very time-consuming prospect because they ask a lot of information. But the thing that I feel very confident in my heart of hearts is that there are not issues that our shareholders ought to be concerned with respect to the investigation by the SEC. I would be the first to tell them if I thought there were some issues.
Through archival footage and powerful interviews, we journey into a tale of audacious fraud and extravagant greed. Tyco International, a Swiss security systems company, was the center of a significant corporate scandal in the early 2000s. Tyco's dramatic fall from grace was primarily attributed to the egregious misconduct of its CEO, Dennis Kozlowski, and CFO, Mark Swartz. Tyco was a massive conglomerate, having acquired hundreds of companies across various industries. Under Kozlowski's leadership, Tyco's stock thrived, reaching a high of $60 per share in 2001. However, this apparent success hid a dark secret. Kozlowski and Swartz were siphoning off hundreds of millions of dollars from the company for personal use.
Did you have a kind of queasy feeling that this might be the beginning of something much, much graver?
Well, I had the feeling that I did nothing wrong and that I have to fight this. Doing what I needed to do was going to take away my ability to run a company.
Their opulent lifestyles, funded by the company's coffers, came to light in 2002, when Kozlowski was investigated for tax evasion. The subsequent audit exposed large unauthorized loans and fraudulent stock sales amounting to around $600 million.
Dennis Kozlowski, CEO of Tyco, who was found guilty of, in effect, using Tyco's immense financial resources as his own personal piggy bank.
This news sent Tyco's stock plummeting, eroding billions in market value. Kozlowski and Swartz were ultimately convicted on multiple counts of grand larceny, securities fraud, and other corporate crimes in 2005.
It's about as Kafkaesque as you can get. It's like a terrorist sitting there with a gun to your head and saying, unless you tell us what we need to hear or what we want to hear, you're not going to get parole.
Tyco's scandal, like many others of the era, underscored the need for stricter corporate governance and transparency, leading to significant reforms in corporate America. The collapse of Lehman Brothers, a global financial services firm in 2008, marked one of the most significant moments of the global financial crisis. Founded in 1850, Lehman Brothers had become a powerhouse in investment banking, making a fortune by securitizing mortgages. In the early 2000s, Lehman Brothers heavily invested in the booming housing market through mortgage-backed securities and collateralized debt obligations. However, as the housing market began to decline in 2007, the value of these assets fell drastically, and Lehman's exposure to subprime mortgages became a critical issue.
Every one of you should feel confident and proud. Our firm is strong today, and we will emerge from this cycle even stronger. We've done it before, and we will do it again.
12 weeks later, the bank went bust.
Lehman Brothers suffering a spectacular downfall. Its stock at one point this year sold.
In 2008, the firm announced a loss of $2.8 billion, the first since it went public.
Lehman's was a seminal moment in the sense that it illustrated these two big problems that if we didn't solve, things would get a huge amount worse.
Despite desperate attempts to secure capital, confidence in Lehman dwindled. Lehman's stock value plummeted, and ratings agencies downgraded the firm's credit rating, making it more difficult for the company to find financial backing. By September 2008, unable to find a buyer or secure government support,
the operator came back to the line and she said, "I'm sorry, the president cannot take your call at this time." There was just a real horrific, blood-curdling feeling in the room of potential destruction and despair.
Lehman Brothers is going bankrupt, and financial markets from Asia to Europe are doing their utmost to prevent Monday from turning from dark to black.
Lehman Brothers declared bankruptcy, the largest in U.S. history with over $600 billion in assets. The fall of Lehman Brothers sent shockwaves through the global economy, triggering a significant recession and prompting drastic changes in financial regulation and oversight.
It was dark out, very dark out. And Dick Full looked up, clearly a man that was in turmoil. And he looked up and he said, I guess this is goodbye.
What could I have done differently? In certain conversations, what could I have said? What should I have done? And I have searched myself every single night.
I think he didn't confess to anything. He made it sound like he personally, Dick Full, did not cause the collapse of the firm.
I can look right at you and say, this is a pain that will stay with me for the rest of my life. That's all.
Global Crossing, an American telecommunications company, went bankrupt in 2002, marking one of the largest bankruptcies in U.S. history at the time. Founded in 1997, Global Crossing aimed to build a worldwide fiber optic network, and it achieved rapid growth in the late 1990s during the dot-com boom. The company's stock price surged to over $60 a share in 1999, driven by investor optimism for new technology firms. However, beneath the surface, Global Crossing was struggling to generate sufficient revenues to match its high infrastructure costs. The bubble burst in 2002, when it was revealed that the company had used dubious accounting practices to inflate its revenues. They engaged in capacity swaps, where it sold network capacity to other companies and agreed to buy back the same amount. These transactions were reported as revenue, creating a false picture of financial health. By January 2002, the company's debts had soared to over $12 billion, and its stock price had plummeted.
Yesterday, a House Financial Services Subcommittee heard from Global Crossing's CEO and top financial officer about the company's collapse.
In the same month, Global Crossing filed for bankruptcy protection.
Telecommunications provider Global Crossing filed for bankruptcy in late January.
The bankruptcy and subsequent investigations into its accounting practices highlighted once again the need for greater transparency and regulation in corporate financial reporting. Adelphia Communications Corporation, once the fifth largest cable company in the United States, collapsed in 2002 due to one of the most extensive corporate frauds in American history. Founded by John Regas in 1952, Adelphia grew significantly in the 1990s through aggressive acquisition strategies. However, beneath this growth lay a complex web of deception. Regas and his sons, who held key positions in the company, had been using corporate funds for personal use and hiding liabilities. The scandal broke in 2002 when Adelphia disclosed $2.3 billion in off-balance sheet debt, previously concealed from investors. This revelation was followed by allegations of rampant corporate looting, where the Regas family had used the company's funds for personal extravagances, including the acquisition of a professional hockey team. Following these revelations, Adelphia filed for bankruptcy in June 2002. The company's stock, which had traded as high as $40 per share in 1999, was deemed worthless.
Keith and Susan, the shockwaves created by the Regas arrest may have been felt across the country today, but it is clear that the community of Coudersport was the epicenter.
John Regas and his son Timothy were eventually convicted of multiple charges, including securities fraud and bank fraud, and were sentenced to prison. The Adelphia scandal became another stark example of the need for increased corporate governance and transparency. Health South Corporation, once America's largest provider of outpatient surgery, diagnostic, and rehabilitative healthcare services, was embroiled in a colossal accounting scandal in 2003, leading to one of the biggest cases of corporate fraud in U.S. history.
Tonight, meet yet one more CEO who could face years in prison for allegedly cooking the books to make himself rich. Richard Scrushy was CEO of Health South, the Fortune 500 healthcare company he created in his hometown of Birmingham, Alabama.
Founded in 1984 by Richard Scrushy, HealthSouth quickly grew to operate facilities in all 50 states. However, in 2003, the U.S. Securities and Exchange Commission (SEC) charged the company and Scrushy with inflating earnings reports by nearly $1.4 billion since 1997. The conspiracy involved overbilling health insurance companies and artificially inflating the company's earnings to meet Wall Street expectations. The scheme was orchestrated by Scrushy and other high-ranking executives, with the cooperation of the company's auditors.
You expect the U.S. Attorney here in Birmingham within weeks to bring criminal charges
I
against
don't
you?
expect that at all. I think an objective review of the evidence will show that Richard Scrushy was not involved in any of these alleged crimes, and they will see that I was not part of that scheme.
The early years were more on aggressive accounting, manipulating reserves and different areas of judgment on the balance sheet.
The revelation of fraud led to a sharp decline in HealthSouth's stock price, with the company narrowly avoiding bankruptcy.
Why don't we take the testimony of people who are not felons, who are not admitted liars, and see what they have to say? Let's get their testimony. They won't say the same thing.
You're not going to jail?
I'm not going to jail. I'm an innocent man. I'm not going to jail.
In the aftermath, Scrushy was acquitted of all 36 counts of accounting fraud in a federal criminal trial in 2005, but was later convicted on bribery charges in a separate case. In response to the scandal, HealthSouth cleaned house, replacing its board and management team. The company managed to survive and rebrand itself as Encompass Health Corporation. But the scandal marked a significant moment in corporate history, emphasizing the importance of ethics and oversight in business operations. Arthur Andersen, once one of the big five accounting firms, collapsed in 2002 following its involvement in the famous Enron scandal, marking one of the most dramatic falls from grace in the corporate world. Established in 1913, Arthur Andersen had earned a reputation for integrity and high-quality services. However, this image began to unravel with the collapse of Enron in 2001. As Enron's auditor, Arthur Andersen was accused of aiding and abetting Enron's massive accounting fraud, as well as obstructing justice by shredding Enron-related documents. In 2002, Arthur Andersen was found guilty of obstruction of justice for destroying documents related to its audit of Enron. Although the firm was not directly implicated in Enron's fraudulent activities, its role in the scandal and the subsequent criminal charge shattered its reputation. The conviction led to the loss of many clients, as Arthur Andersen could no longer conduct audits. Though the firm's conviction was later overturned by the Supreme Court in 2005, it was essentially too late. The company had already lost the majority of its customers and employees, and it ceased auditing operations. Today, the fall of Arthur Andersen stands as a cautionary tale about the importance of corporate ethics and responsibility. Bear Stearns, a prominent global investment bank and brokerage firm, fell dramatically in 2008, becoming one of the first casualties of the global financial crisis. Founded in 1923, Bear Stearns thrived on high-risk trading and aggressive investment strategies. By 2007, it was heavily invested in subprime mortgages and held a large portfolio of mortgage-backed securities, making it particularly vulnerable to the declining housing market. In early 2008, the firm began experiencing liquidity issues as market confidence dwindled. Concerns about its exposure to the troubled mortgage markets led clients to withdraw their assets, triggering a liquidity crisis. Despite last-ditch efforts to secure funding, the situation worsened rapidly. In March 2008, Bear Stearns, facing imminent bankruptcy, was hastily bought by J.P. Morgan Chase at a significantly reduced price, with assistance from the Federal Reserve. The sale effectively marked the end of Bear Stearns as an independent entity. Bear Stearns' fall was a significant event in the global financial crisis, leading to widespread calls for increased regulation and oversight of investment banks. Its collapse signaled the beginning of the most acute phase of the crisis and served as a stark reminder of the risks of high leverage and insufficient liquidity. Bernard L. Madoff Investment Securities, LLC.
It's been 2.5 months since Bernard L. Madoff was picked up and charged with what's believed to be the largest financial fraud in history.
Founded by Bernard Madoff, was at the center of one of the largest and most notorious financial frauds in history. A Ponzi scheme that spanned decades and defrauded thousands of investors out of billions of dollars. Madoff, a respected figure on Wall Street, had built an investment firm that attracted a diverse group of investors, including charities, celebrities, individual investors, and even universities. Using his reputation and promise of steady returns, Madoff collected large sums of money, which he purportedly invested. However, in reality, Madoff was running a Ponzi scheme, using new investors' money to pay returns to earlier investors. This fraudulent operation continued until 2008, when the financial crisis made it impossible for Madoff to sustain the scheme. In December 2008, Madoff confessed to his sons, who reported him to federal authorities. He was arrested and charged with securities fraud. In 2009, Madoff pled guilty to 11 federal felonies, including securities fraud, investment advisor fraud, and money laundering. He was sentenced to 150 years in prison. The Madoff scandal underscored the need for increased vigilance and regulation in the financial sector to protect investors.
You would never suspect him of fraud unless you knew the math.
So, I mean, you're like a math guy, right?
I've taken all the calculus courses from integral calculus to differential calculus, as well as linear algebra, and statistics, both normal and non-normal.
How long did it take you to figure out that there was something wrong?
It took me 5 minutes to know that it was a fraud. It took me another almost 4 hours of mathematical modeling to prove that it was a fraud.
What were the things that caught your attention?
It was the performance line. As we know, that markets go up and down, and his only went up. He had very few down months. Only 4% of the months were down months, and that would be equivalent to a baseball player in the major leagues batting .960 for a year. Clearly impossible. You would suspect cheating immediately.
And so the stories continue. Their monumental rise, their tragic fall, and the human cost left in their wake. Join us on this sobering journey as we uncover the pitfalls of unchecked ambition and unbridled greed. Because understanding our past is the key to shaping a more ethical and sustainable corporate America. This is Rise and Fall. 10 American corporations collapsed by fraud and greed. Stay with us. We aim to provide you with valuable insights and captivating content regularly. Be sure to subscribe and hit the notification bell so you don't miss out on our latest episode.